Welcome back to the Real Estate 401k show, where I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes. Fortunately for our listeners, I don't have to do any reading during the segment, so I'm going to take off my glasses here. It's so much nicer. I look better.
Is it?
I look good.
Do you?
I look good.
Okay.
Well, I tell everybody, I make fat look good. It doesn't matter. I just. All right. I don't know. Text the word right. WRITE to 623 AZ Recon. That's right to 623 AZ Recon, especially if you are wanting to learn more about the lending process of like what happens when you get pre-qualified for a home. You go out with us, we get you under contract for a home, and then close of escrow is 30 days from now. And like people go, it's almost like that 4 minutes when a spaceship re-enters the Earth's atmosphere and they go dark and they go silent and nobody knows what's going on there, and so forth.
That was a good metaphor.
That was a really good one.
I like that, buddy.
All right.
Well
He's
done.
growing up.
I know.
So one of the terms, Justin, that we hear all the time that I think there's a lot of real estate agents, and I may not even know all the nuances of it myself, but we hear that, okay, your loan has been submitted to underwriting or it's with the underwriter. What the hell does that mean?
Yeah.
And who is this person? Is it this Oz character behind these giant drapes?
Right? So an underwriter doesn't have any interest in your loan. So they don't get paid on or an incentive by closing the loan. They work off of a certification, basically to certify the loan. They're the only people that can actually stamp a true approval on a loan. So if you hear your loan has been pre-approved, that means that an underwriter has already seen it and they've pre-approved the loan. If you're here
Based on the person, right?
Based on the person, based on the scenario as well.
Okay.
If you hear you're pre-qualified, that means that myself, my loan officers, we've looked at it, we've verified what we feel is best need in the file. So, depending on the seasoning of the loan officer can depend on how much you can trust a pre-qualification. An underwriter, they review everything from the full credit report, the history of the credit report, your bank statements, the deposits in the bank statements, making sure that there's no large deposits, making sure that there's no cash deposits, checking the money transactions, to pay stubs, hours worked. Is it consistent? Is it variable income? They're looking at the types of income you're receiving, commissions, bonuses, stipends, shift differentials.
So at the end of the day, they're like the decision maker.
They are the decision maker. Absolutely. Absolutely. But they're the decision maker based on guidelines that investors put forth in front of them. So they're going off of these guidelines based on the reading of the guidelines. The underwriter is making a decision. So keep in mind, guidelines can be interpreted differently based on the way they're written. So underwriters can be absolutely different across the board. Myself, I put files in front of specific underwriters at sometimes, that I know how they underwrite, and they show a trend, they show a consistency. But an underwriter is making sure that everything's solid, everything meets the guidelines. History is solid. History of ownership, history of rental income or rental payments, all that good stuff.
So it's one of my questions was, which you already answered, is why can I take one loan package at one underwriter and they could potentially, let's just say they say no, and then I take the same loan package over to another underwriter and they say yes.
Yeah, it's interpretation.
Okay, so that being said, it would seem to me that not only it doesn't matter who you choose, but is there any negotiating that you play a role in with your underwriter?
So
talk to me about how the sausage is made over there.
Yeah. I would say not so much negotiating, but teamwork. It happens.
I like that. I'm going to start using. I'm working with you.
We're
trying to get to a mutual.
We're all trying to
agreement.
get to the same place.
Okay.
You know, we're all trying to get to the same place. But I have relationships with my underwriters. I have, I have personal conversations with them. But sometimes an underwriter can just deny something, or they may call you because they like you and say, "How about we try this?" Because that's not what they typically do. They don't typically structure deals, but a lot of times when you can get them to work with you,
might help you troubleshoot it.
It helps you troubleshoot it. And if you have the underwriter on the phone and you're like, "Well, I was thinking this direction. Tell me why I can't go this direction." And sometimes they're like, "Well, that does work," or "Well, this doesn't work because of this and this factor." And you're okay. Good point. Well, which way do we need to go? So sometimes we'll get on Zoom calls with the underwriters, and we'll both pull a file up, and we'll start going through it, and we'll figure out a way. And I'm telling you, 9.5 times out of 10, we're figuring it out.
So I think this has always been the confusion for borrowers. When the deal is facing challenges or they're not getting answers back, a typical buyer points the finger at the loan officer, which would be you, because they're under the impression, because they don't understand the process, that, and a lot of times it's out of your hands. You are not the decision maker. You prepare the packet to send to the decision maker and work with the decision maker. So you got to understand it's not your loan officer.
Well, I'm gonna argue with you on that.
Okay.
So
I'm trying to make you look good.
I appreciate it, and I feel like this is gonna make me look good. It's not all, like I said, an underwriter doesn't structure a deal. I structure the deal. I put together a report for my underwriter, and I lay this report out to my underwriter based on the where I'm taking the loan, how I'm taking it there, based on the guidelines that we both have in front of us. And I'm saying this is why it fits.
Okay.
And go ahead.
No. So then my question is, okay, so then I'm going to blame you. It's all your fault, Justin.
Sure.
Okay, great. Is then if the underwriter plays such an important role, what questions when one of our listeners, or there's a buyer out there who's now searching lenders and shopping lenders, what are some questions that they should be asking? Because for me, like one of the questions I like to know is, do you have in-house underwriting?
Yeah.
Which means you literally, theoretically, could get up, walk down the hall and have a conversation, and I could meet you in the parking lot and say, here's a case of bourbon. Let's give this to the No, we don't do that.
Yeah.
As opposed to now I walk into a big box bank, let's say Wells Fargo or Bank of America, and God only knows where that underwriter is and how is a loan officer at a big box bank even have the option of having communications or direct communications with the underwriter. So what do we ask as buyers?
I agree with asking if in-house underwriting is available. Now, a big box bank is going to have in-house underwriting as well, but it's different. They're in a different state. The communication is completely different. But I would say a really important thing to take note of is, when I get clients in front of me, I want to know everything. So lay it all out there for me, the loan officer. I'll decide what goes in the file and what doesn't go in the file, or how we're going to approach that in the file. I think a lot of customers that have tricky files get scared of my experience because I'm trying to work through all the problems before I submit it to underwriting. Whereas they might walk into after talking to me, they might walk into a big box bank and they're like, "Oh yeah, this is easy. Let's just submit this in. This is good. We're good." That's called throwing pickles on the wall and seeing if it sticks. Pickles, tomatoes, whatever you want to do.
What are we in the 60s?
Yeah.
I've never thrown a pickle at somebody and seen it stick.
We call it window dressing. Window dressing.
I call it something else.
I know.
Yeah. But that's the thing is you have to understand what you're dealing with. If you feel like your situation is complicated, it probably is. Your loan officer should probably be asking you a bunch of questions, make sure they completely understand everything before they're submitting it. And I can't even tell you how many times a month that I get somebody that walks away from me and then comes back to me later on in the process, which is fine. But I'm not trying to get the deal up front without making the file pretty. My report is going to be an A report when I submit it. I'm not submitting just the bare minimum of bullshit just to try to get my underwriter to stamp an approval and then give me a shit ton of conditions that I have to collect from you later on, or that may cause us a problem while we're under contract to purchase a house. So I'm not wasting your money on an inspection. I'm not wasting money on an appraisal. That's why I pay for appraisals too, so they know that I have a skin in the game, so they know that I'm not just saying that it's going to work. But I'm not messing around with that. This is my profession. I'm going to make an A+ paper so that my underwriters, one, like me because I do a good job and I'm not just leaving them with shit to figure out how to do a file. And then two, so that my client is not dealing with trying to pick up all kinds of crazy shit in the middle of purchasing a home when they got 9,000 other things going on, like packing, inspections, walkthroughs, getting insurance quotes, scheduling movers. There's too much going on in that 30 days to bother them with crap.
Well, I just got to say, obviously, Justin becomes really passionate about something when he says the word shit 4 times in a 9-second span of time.
Yeah, by prefacing it with pickles on the wall.
Well, yeah, I'm like,
You get a pickle. You get a pickle.
Oh, man.
I'm talking about sliced pickles too, by the way.
Hey, however you want it, brother. That's your business.
Oh boy.
All right, so you package the deal, right? And then you send it over to the underwriter.
No, it goes directly to my processor.
Okay, so you to processor, then to underwriter.
Yep.
Okay. Now, here's one of the things that I know a bunch of people going through the process, whether it's purchase or refinance or whatever, that they're always like, dude, I'm just getting nickel and dime for this, and then they ask for that. And at what point does it stop? At what point is it like, okay, this loan is ready to go. I don't need to worry about submitting more information, getting harassed by anyone.
At recordation.
I know the answer. I want Justin to explain.
So, majority of the time, I'm going to say clear to close. Okay. However, sometimes on clear to closes, we get prior to funding conditions. Most common prior to funding condition is if you're selling your house and you're buying another one and you're using proceeds from the sale of house number 1 to buy house number 2. Well, a prior to funding condition means that prior to us funding this loan, we need to see the final settlement statement of you selling your house. So if that house doesn't go through, you can't get home number 2 because we're conditioned on selling home number 1. So that's common. Maybe re-inspections too. Sometimes we'll make it a prior to funding condition if we have a fast closing. But typically at clear to close, it's all done other than you signing your papers. Now, just because it's all done there, it doesn't mean we could pull a new credit report to make sure that it's an audit. There's no new debts that you've obtained to make sure the debt to income ratio is in place. Make sure that you didn't buy a car.
Or I've had
your job.
I've had this happen before, where buyer gets qualified and does all the credit check and doesn't realize we're doing a second credit check or an audit at the end, and says, well, then I now don't have to make my car payment.
Yep.
And so when they did the second credit check, there was the car payment that was late, just sank the whole deal. And then a lot of people don't understand that sometimes lenders prior to close do a job verification. And because I had a lady, husband, after got pre-qualified, quit his job.
we're required to do at least a verbal verification of employment 5 days prior to closing. And even if you submitted your 2 weeks, your likelihood of continuance of the job is gone because you're ending that job after that 2 weeks. So it no longer works. So you can't even put in a 2-week notice to an employer.
All right, one last question, and this will be probably a little bit of a lengthy answer, but I know as a listing agent, when I have listed someone's house and we are now receiving offers, because of our experience, Ryan and I definitely know the difference between this person's been pre-qualified and this person's been pre-approved. Buyers need to understand what a big deal that is when it comes down to competing with other offers. When you have a pre-approval from the underwriter, on the flip side, buyers don't like to do it because it's a lot of upfront work. Walk me through what that looks like.
So basically, we're going to disclose a full loan package to the borrower. So they're going to have to sign all these documents, basically an IRLA, which is your loan application, all kinds of fraud documentation, insurance documentation, loan estimates, and then basically it's going to be based on TBD, to be determined. So we don't have an address, we don't have an actual purchase price at this point, but then we're getting all new documents as far as income, assets, IDs, things like that. Then we're going to go ahead and pull like fraud guards. When fraud guards will show like foreclosures in the past or other properties possibly owned, we'll pull case number, or excuse me, we're not going to pull case numbers for FHA, but we're going to pull Cavers reports, which will show like any federal debt delinquent. And we're going to submit this to the underwriter, and it takes time. So pre-qualification, if I get all your documents today and I think you look good, I'm going to be able to issue a pre-qualification probably within an hour of you submitting your documents.
All right.
With a pre-approval, I have to go through I have to send you the loan package. You have to sign everything. I have to pull all these verifications, and then I submit it to the underwriter. So, I mean, it could take up to, I'd say, 7 days before you get your pre-approval back. People don't understand why that takes so long. You're in a line. You're waiting.
All right. If you gave Ryan and myself each 100 pickle slices and we were to throw them up against the wall, who would have more pickles stick to the wall, me or Ryan?
I'm just, based on knowing you guys, I'm going to say probably Ryan would have some more pickles stuck to the wall.
Why? That doesn't even make any sense. Like, how does your brain work? All right. Well, if you'd like to learn more about the lending process, but more importantly, an opportunity to reach out to Justin and his team and walk through this process, I am just telling you, not all lenders are equal, and it's not necessarily just about who you like the best or what percentage they put on a flyer or a Facebook post, because at the end of the day, the goal is to get to the closing table, and we would love to invite you to reach out to Justin, and you can do that by texting the word RIGHT to 623-AZ-RECON. That's RIGHT to 623-AZ-RECON.